All right, once again, thank you to everyone for joining us today for our webinar on getting your PPSR sorted. With me today, I've got Natalie Ledland, who is the Solicitor Director for Ledland Lawyers.
Hey, Paul. Hi, everyone.
So to kick off, we'll just run through a bit of an agenda for today's webinar. First of all, we'll do a quick recap on the current economic outlook, a review of the PPSA itself, the importance of the security agreement in the PPSR and the registration process, look at the perfect PPSA clause, the importance of the register itself from a credit application and customer onboarding process, and then finally we'll look at what happens in an insolvency. If at all you have any questions as we're running through the webinar, please feel free to ask. Hopefully we'll have some time at the end to answer those questions as well. So in terms of the current economic outlook, I feel like it's quite important to touch on from a PPSR perspective and also from Creditor Watch and our customers. The outlook itself is fairly uncertain. There's a number of factors that are obviously affecting that. Obviously, we have the rising inflation and interest rates, push for higher wages amongst many sectors. The activity, the collection activity from the ATO has really increased, and you'll see that with Creditor Watch bringing on ATO tax defaults as well. Rent abatements are coming to an end for retail and commercial tenants. As you've seen from our recent webinars, the number of insolvencies across the board within Australia are increasing. And as most of you would know, as businesses out there, there is a lot of supply chain issues which have been caused by a number of recent factors. And finally, we're seeing a lot of global uncertainty with warfare in not only Ukraine, but potential situations occurring in other countries as well.
Paul, just to add to that, I'm not sure if you saw in the news yesterday, but it was announced that inflation was essentially the highest that it's been since about 2001. So to put that into perspective, without aging myself, I was still in high school in 2001, so it was a very long time ago. And I think experts are predicting a pre-election rate rise. So yeah, as you said, we've got some really, really interesting and uncertain factors happening in the economy, and that's obviously going to affect not only Creditor Watch customers, but also their own customers that they're dealing with and supplying.
Yeah, absolutely, Natalie. All right, we might kick it off next with a bit of a poll question. The question is, has your business been affected by any of these issues? All right, we can see that there's quite a resounding view that most businesses and most listeners have been affected by some of those issues recently.
Yeah, that's interesting, Paul. And I think for those businesses who have been affected, or even if you're anticipating that you might be affected by any of those factors in the future, the most important thing that you can do right now to take back some control is to really be prepared. Get your processes in place, get your documentation in place, and really take advantage of the risk management tools that you have available to you. And obviously the one that we're going to talk about today is the Personal Property Securities Act and how businesses can actually use that to protect themselves and get paid, which is obviously what we all want. So I thought, Paul, I'll just do a very brief recap. I've done some webinars with Creditor Watch before where we've kind of talked quite in depth about the context of the PPSA and more specific technical elements. I'm not going to necessarily go into that too much today. I'm going to try and keep it a little bit practical, but I did want to do a little bit of a recap just for people who maybe aren't as familiar. I would recommend, though, if you're wanting a little bit more detail, go back and have a listen to some of the previous webinars that I've done with Creditor Watch on the more technical side. But essentially, it's kind of hard to believe, but the PPSA has actually been around for a decade. So back in 2012, it came into effect. And really the purpose of the PPSA is a mechanism for securing payment for either the supply or the hire of goods or obligations that somebody might have. So it's quite important that we understand the difference between what we refer to as real property. So that's land and anything that might actually be affixed to the land. So often I think a lot of the Creditor Watch customers, they'd probably be used to hearing the term security in reference to perhaps a mortgage or a caveat over somebody's real property. What we're talking about today is security over personal property. So that's things like any kind of goods, cars, boats, jewelry, shares in a company even, certain intellectual property rights, even things like cryptocurrency, which I know is a big thing now, cash in the bank, those sorts of things. So when you're thinking about what is the personal property that we're talking about at the moment, have a think about the product that you are actually selling or hiring or supplying, and that is going to be the personal property that we're talking about taking security in. So I wanted to do, I think, a little bit of a poll question just to see who is actually registering on the PPSR. I think we've done this in a few of the different webinars that we've done, and there's usually a little bit of a split. So I thought I might see, just after the uncertainty of COVID, if anybody's actually taking advantage of the protection of the PPSR.
Yeah, so I've just launched that that quick poll now. We'll close that off. So it looks like most of you are actually, or the majority of you are actually registering at the moment. There's still quite a few out there that aren't registering as yet.
So we've got 41%, Paul, of people listening today who aren't registering. And for those people who aren't registering, I'm wondering, what's the reason why you're not registering? If there's a specific reason, feel free to sort of pop it into the question box. But I thought I might just run through quickly before we get into some of the practical elements about some of the reasons that I encounter when I chat with clients about why they're actually not registering. And the number one reason that I often encounter is people are concerned about the cost of registration. So the first thing that I say when somebody raises that objection with me is, what is the cost of not registering? So often people think that registering on the PPSR is going to be a really huge cost, but actually it's quite small in comparison to potentially the amount of sales that you're making, the supply that you're making to your customers, actually the value of your goods that's out there with customers. People, I think, make the assumption that a registration needs to be for an unlimited period of time, which is obviously the most expensive registration that you can do. But actually, most people find that they really only need a 7-year registration, which is the shortest registration period, and it's also the lowest cost. Often what I will say to clients is build something into your terms and conditions which will actually allow you to pass that registration cost on to your clients. That's obviously a business decision. Some businesses don't like to do that, but if you are concerned about the cost of registering, there is the possibility to pass that on to your customer. And the other tip that I give to businesses that are maybe hesitant about the cost of registering is have a look at your customer base and essentially split them into high, medium, and low risk customers. So you might actually decide to only make registrations against your high risk customers. So have a look at things like how long has the business been around, what's the nature of the business. If it's a construction industry type business, then that's probably at the moment, unfortunately, going to be a little bit higher risk than some of the other businesses that we see. How much credit are you planning to extend to your customer? And kind of make an assessment on that basis if you are concerned about registering against your whole customer base. So really, yeah, those are the tips that I give to people who are concerned about the cost of registering. Another concern that people often raise with me when they come to see me about PPSA is they actually don't think that PPSA is relevant to them, or that it actually applies to their business. And the first thing that I normally say is don't make an assumption about how the PPSA is actually going to work with your particular business. So one thing that I've learned in all my years as a commercial lawyer is there's no two businesses are the same. Every business has something different going on, and often I'll get clients coming to me, for example, who don't actually supply or hire goods. So perhaps you're a business that provides services, and so there's not actually necessarily personal property that can be attached to that supply of services. What we can actually do for those businesses is we can actually work some clauses into your documentation which will allow you to register. So I don't necessarily have time today to go into how we would do that, but if you are supplying services, you can still be protected by the PPSR. A couple of other business types that I see who are concerned about registering are, for example, if you're supplying perishable goods, so things like fresh meat or fresh seafood. Sometimes clients come to me and they're concerned about registering those types of goods because they think, well, you know, it's gone so quickly, how can I be protected? But actually we can protect those sorts of businesses as well, and I will touch on some of that a little bit later. And also businesses that perhaps are being commingled with something. So maybe you are supplying a ceiling tile that's going to be put into a building, or a door handle that's being attached to a door, and you're concerned about whether or not you'll actually be able to get your goods back once it's been affixed or commingled with something. So all of these ways, whilst on the surface you might think that you can't actually register, there are ways to register for all sorts of different businesses. So I would say just, be open-minded, I guess, about the PPSA and whether or not it applies to your business. And then the third thing that I often hear from clients is they actually just don't necessarily know how to register. They're confused about the registration process, or they're confused about you know, what they need to do in order to register. That's where I would say you get the experts in. Talk to somebody like Creditor Watch, come and talk to a legal expert, or actually see if there's any free resources available to you. I know you've got some on your website, we've got some on our website at Leather Lawyers. The government side actually has some really great free resources for small businesses. So there's lots of help out there, and it certainly is a very complicated topic. So if you're not understanding, there's absolutely nothing to be ashamed of, just seek help early. So those are sort of the main reasons that I see people not registering, and hopefully I've addressed some of the concerns that people out there might have. But if you've got some other concerns about not registering, feel free to pop those in the question box.
Yeah, so we might launch a quick poll just based on those topics you raised, Natalie, and just for those of you who aren't registering at the moment, to get an understanding of potentially why.
Oh, fantastic. So we can see there's also an other option there. So I learn something new every day. So I would love to know if there's other reasons out there why people might not want to register.
Okay. So we'll close that. I'll just share those results so we can have a look at those.
Interesting. Okay. So what percentage is that that's other? Can't see that, Paul.
That was about 48%. So
great.
Quite good to know what. That's
I would love as well. If people wouldn't mind sharing the reasons why they're not registering, that would be really, really helpful, so that we can perhaps address some of those concerns that you might have. Interestingly, cost is the smallest one, so that's, I guess, good to know. Okay, so what I thought I would talk about today, Paul, is what you actually need in order to be able to register. I think there's a common misconception out there that the fact that the Act exists, that there's a piece of legislation that allows for security to be taken in these personal property or goods, that people can just automatically register. But that's actually not the case. What you actually need in order to register is what's called a security interest. And in order to have a security interest, that needs to be specifically created in what's called a security agreement. And the security agreement that we refer to for most of the Creditor Watch customers is your terms and conditions of sale or supply or hire. So it's basically the contract that you are entering into with your customer. So you do actually need to have that written document that sets out your security interest, and that needs to be agreed to with your customer. So I actually get a lot of clients coming to me, showing me their terms and conditions and saying, I want to go ahead and register, but they actually haven't created a security interest within their terms and conditions, or perhaps they just have a credit application. They haven't actually, they don't actually have any terms and conditions. So we do actually need that written agreement between you and your customer in order to register. And the reason why that's so important is because if you don't have that security interest created, you're not able to register, and basically all you're left with is your unpaid account and essentially just the right to sue for that unpaid money. You don't have the right then, or the ownership in your goods, and you don't have that registration to protect yourself.
All right, so we might jump into our next poll question is, do our listeners out there, do you provide your customers with terms and conditions?
Oh, good. I'm very, very happy to see 98% of people are providing their customers with terms and conditions. So that is fantastic. That makes me extremely happy. For the 2% of people who say no, please email me after this webinar. I would be more than happy to have a chat with you about the importance of terms and conditions, because what I actually do see a lot in practice is people who don't necessarily understand or value the protection that's given by the terms and conditions. And whilst we need that for the PPSA, there's also lots of other reasons why you need additional protection in your terms and conditions, just for the purposes of doing business with your customer. So often what I see is clients coming to me and saying, well, you know, I've had these terms and conditions for quite some time. You know, they've worked fine for me now. I haven't had much of an issue, so why would I update them? So yeah, more than happy to have a chat to those people who aren't, who don't actually provide their customers with terms and conditions. For those of you who do provide terms and conditions, grab them. If you've got a set handy, grab them and have them with you, because what I'm going to do is actually talk through over the next couple of slides what I would be expecting to see in you know, the sort of perfect PPSA clause if we're having a look at somebody's terms and conditions. One caveat that I will say is PPSA is not a one-size-fits-all solution. So I'm going to go through some of the things that I like to see in a PPSA clause. Those won't necessarily affect every single business, but certainly the majority of them for the Creditor Watch customers will apply. So if you're concerned about something that you have or haven't heard me say, more than happy to answer any questions or have a chat to people after the webinar. So I'm basically looking at terms and conditions and PPSA clauses every day. So I'm seeing at least one a day, sometimes more. Sometimes I'm dreaming about PPSA clauses at night, or maybe it's a nightmare, I'm not sure. And what I normally do when I have a look at a set of terms and conditions, in particular in relation to PPSA, is I am looking for the red flags in the document. And I'm actually putting my liquidator hat on, or my insolvency practitioner hat on, and I am looking at the document as if I'm trying to pick holes in it, if I was an insolvency practitioner trying to invalidate your registration. So I basically created a little bit of a list of the red flags that I look for. And the first one is, are there any terms and conditions? Is there actually, or it could be, a loan agreement, it could be some other form of contract, but for the majority of the people listening today, it's going to be your terms and conditions. Do you have a written agreement? If no, then that's a huge problem for in terms of a registration. So that is my number one red flag that I'm going to look for. The second thing that I will look for is there a retention of title clause? For those of you who aren't familiar with retention of title, it's essentially the ability to retain ownership in the goods or the product that you are selling, supplying, hiring, leasing to your customer. The ability for you to retain ownership in that until you have been paid for your goods. So, or for the hire or for whatever it is that you're supplying. So for the majority of Credit to Watch customers, you are actually extending credit to your customers, and you're actually parting with your goods and your property before you're being paid. So the retention of title clause is the clause that you will need to keep ownership of those goods until you receive payment. And that is usually, for most of the Credit to Watch customers, that will be what creates your security interest. So if you don't have a retention of title clause in your terms and conditions, and I actually do see quite a few terms and conditions that don't have retention of title clauses, if you don't have that, then you are not going to be able to create a security interest, and that will mean that you are not going to be able to register. So that's the second thing that I would look for when I'm going through a set of terms and conditions. The third thing that I look for is actually just a reference to PPSA, but it's not enough just to have a reference. So it's not enough just to have, stick a definition in there, just have the words Personal Property Securities Act 2009. It's not enough to have that. You actually need very specific wording within that PPSA clause. And the two things that I look for first within that is a reference to a security agreement. So words along the lines of these terms and conditions are a security agreement for the purposes of the Act. And then we also need wording that's actually going to create the security interest. And I also like to see wording that actually, where the customer is actually agreeing that you're going to lodge a financing statement on the register, which is basically your registration. So oftentimes people will say to me, they're just words. But in the case of the PPSA, because it is so prescriptive and technical, those words are extremely important in how they are actually framed. So when I see, a definition or a reference to PPSA, that's great, that's a tick. But then we also need to go a little bit further with how we actually express those words. The next thing that I will look for is a clause that actually takes a security interest, not just in the goods or the personal property, but also extending that a little bit further and allowing you to take a security interest or a claim in the proceeds of those goods or that personal property if it's actually on-sold at any point. So you might not actually have, for example, if you're selling pens or supplying pens, maybe those pens have been on-sold, so you can't actually get those goods back. But what you can do is actually get paid out of the proceeds of those pens, for example. Oftentimes I won't actually see any specific reference to proceeds, or I see clauses that are quite vague when it comes to proceeds. And generally speaking, what I will say is it's actually better to have specific clauses set out in your terms and conditions rather than relying on somebody's interpretation of the Act and whether or not you can claim proceeds under the Act. What you want to be doing is making that claim for proceeds right up front in your documentation. The next thing that I look for is a clause that's going to prevent a higher ranking security interest from being created in your goods. So you should have an express obligation on your customer to prevent other people from creating and registering a higher ranking security interest, because basically when your customer goes into liquidation, there's going to be a line of people all jostling to get paid. And what you want to be able to do is use your registration to put you at the top of the queue for getting paid. If your customer is allowing higher ranking security interests to be created and registered, there is a potential that that person is going to leapfrog over you with their registration and potentially get paid before you. So often I will see terms that actually don't make any reference to higher ranking security interests. Sometimes it says that can be created, but just with consent. But what I normally recommend to clients is having an express prohibition on that higher ranking security interest being created. The next thing that I normally look for is, has this client got terms in there that allow them to contract out of some clauses in the PPSA? So it might sound a little bit weird to sort of talk about not complying with some of the clauses in the PPSA, but there is a regime within the Act that actually allows you and your customer to contract out of some of the obligations in the Act. If you've got your terms and conditions in front of you, you're probably in your PPSA clause, if you've got one, you're probably going to see, you know, maybe 10 or 15 clauses in there that you can contract out of. One of those is probably going to be your notice requirement. So under the Act, if you do make a registration, you're actually obliged to give notice to your customer of that registration. And that's obviously, for some businesses out there, that's a huge administrative nightmare to be providing notification of the registration. So what you want to be able to do is contract out of that notice requirement so that when your customer comes on board, you make the registration and that's the end of it. You don't actually have to worry about notifying anybody. So hopefully you do have that particular section in your clause. But what I would also say is, as I said before, PPSA has been around for a decade, and lots of people still have clauses that were drafted, you know, even before the Act came into effect, so in anticipation of the Act. So even if you do have those contracting out clauses included, I always recommend that people actually review those, make sure that you actually have the relevant ones included and that they're actually correct. Because a lot of things can change in 10 years. Advice that lawyers might have given you about your clauses 10 years ago is probably not going to be the same advice 10 years later. So making sure that if you do have that, you've actually updated it. The next three, I think, tips that I've got for everybody don't necessarily apply specifically to a PPSA clause, but they actually apply to your terms and conditions in general. So once I have confirmed that you do have a security agreement, so you've got terms and conditions, I've looked through your PPSA clause and I've had a look for some of these red flags. I've tried to make sure that you are protected in the ways that I've just talked about. The next thing that I will do is I will look at your terms and conditions more broadly in relation to some of the other general terms. So, for example, do your terms and conditions allow you to actually vary the clauses from time to time? If you don't have the ability to vary terms and conditions, even if it's just a very small amendment, this could actually be considered a new or separate contract if you actually do update your terms and conditions. And what that means is you're potentially going to have to do a new registration. So that means that the previous or current registration that you've got is not going to protect you for any future supply unless you've done a new registration. So what you don't want to do is be updating your terms and conditions and actually causing a break in the perfection of your registration, because that's going to leave you exposed. So making sure that your terms and conditions actually do allow you to update T's and C's from time to time. The next thing that I look at is how do you actually notify your customer about changes? Because obviously your customer needs to be aware of your PPSA terms and all of the other terms as well. So sometimes when I'm updating terms and conditions and clients are coming to me and asking me to add PPSA terms in, there's then got to be the next stage of actually notifying your customer, and that is taken from your current terms and conditions. So do you have to give notice to your customer? How is that notice actually provided? Is it written? Sometimes there's, say, a 7-day notice period of providing, notice of the changes to the terms and conditions. So making sure that your customer has actually agreed to any new PPSA clauses. And finally, what I would say is I see a lot of terms and conditions that actually say that each order or supply or delivery creates a separate contract between the parties each time that order is placed or the delivery is made. And what that actually means is, it might seem counterproductive, but what that actually means for the PPSA is a new security interest is being created every time a customer places an order with you. And that means you need to be doing a separate registration for each of those separate orders, which again is not what anybody wants. You just want the one registration that you can set and forget. So making sure that if your terms actually do have that reference in them, you probably want to update them, because otherwise you may not necessarily be protected for each of the orders that have been placed and there hasn't been a registration for. So that is, generally speaking, the types of things that I would look for in your security agreement. And I just wanted to let everybody know that we have actually at Ledlin Lawyers created a free lead check. So it's a contract health check, which has a look at your PPSA clause in your terms and conditions or your documentation. We give it a score out of 10, and we let you know the high, medium, and low risks associated with your clause. So the website is there. We actually do have a portal where you can upload your document if you want anybody to check it. Or also feel free to send me an email, send your documentation through, and I can get that lead check prepared for you. So if you've listened to these last couple of slides and you're really uncertain about how good your PPSA clause is, feel free to send it through, and we can let you know how you've scored. Okay, so I guess that's the first part of making sure that you have the ability to register, is getting your security agreement right and making sure that you've actually got a security interest that is protected properly. The second stage of that is actually making the registration and using the register to your advantage. So essentially, the register is basically like an online notice board of all of the different security interests that have been perfected or registered. If you haven't registered, then essentially you're going to lose title or ownership in your goods if your customer goes into liquidation or enters into an insolvency regime. So registration is key. It doesn't matter how good your documentation is. You need to be able to register and register correctly. Often I will also recommend to clients that they use the register as part of their credit assessment process. So if they're reviewing a customer and working out whether or not they actually want to extend credit to them, have a look at the other registrations that they have on the register and see whether or not that gives you any indication of whether you actually do want to do business with that customer. And I know, Paul, that Creditor Watch have a few different products, but in particular the PPSR Logic, that really helps with actually the registration process.
Yeah, absolutely, Nat. So as part of the PPSR Logic platform, you can do a comprehensive PPSR search on your customers to, as you said, determine whether potentially a business is supplier shopping, or whether they're suffering some financial difficulty and they're looking to obtain additional finance from other lenders. It also gives you a good understanding of whether they're looking at your competitors, have come from a competitor, potentially been declined or have used them in the past, and are now using you as well. So it can be done as part of the PPSR Logic platform itself, or it can be added to your Creditor Watch credit report that you do on any new customers you undertake. So it's an additional option to get that criteria in there. Because the PPSR search will show you when a registration is created, you get a really good feel as to whether a business is well established and is just seeking new finance, or as I said, whether they are going through that supplier shopping and having some difficulty with finance as well. So there's two aspects to it: using PPSR Logic or Creditor Watch to do those PPSR searches, and we'll give you comprehensive search results as well.
I actually had a client come to me in the last couple of weeks, Paul, who had taken some time off as credit manager and came back and realised that while she was away, all of her registrations had actually lapsed or expired, and there hadn't actually been a renewal of those registrations at the end of that period. And the reason for that was she wasn't using someone like a Creditor Watch. There wasn't a process in place to actually identify, the end time for the registration. So I always recommend to clients, have a process in place, use somebody like a Creditor Watch to just set that process up and make it really easy from start to finish. And then when your registration is coming up for expiry, there's no chance of you actually missing that expiry date, which I know I think PPSR Logic will notify you of expiry dates. Is that right?
Yeah, absolutely right. So with all of our users that are accessing the platform, they receive a notification from us 4 weeks out from the initial expiry date, and then subsequently each week up until expiry, there's a reminder to take some action in there. Within the platform as well, we give you some prompts and some countdown timers as well, so you can see when a registration is coming up for expiry, and make sure you don't miss out on having that perfected registration continue past the potential expiry date.
Yeah, great. Okay, well, I'm just looking at the time, Paul. I think I have I've talked quite a lot so far. We do still have a fair bit to go. The next thing that I was going to talk about was essentially what happens in an insolvency event, which is really where PPSA comes into effect. Sometimes clients come to me looking to talk about the PPSR, and they sort of see it as more of like an everyday debt recovery tool, which it's not really considered that. Actually, where you're going to get the most benefit from the PPSA and PPSR is once your customer goes into liquidation, because that is when you want to get paid or you want your goods back. So I'm not sure if you want me to just press on with what I've got.
Yeah, look, I think we are running a bit short on time, but we can certainly cover off the insolvency, and then we might actually conclude the webinar at that point in time.
Yeah, we may have time, for questions, but please feel free, everybody, to pop your questions into the question box, and I will, or Paul, will make sure that all of those questions get answered and sent out to you. So don't worry, I will get to everybody's questions at some point. So as I said, insolvency is really where the PPSR comes into its own. If you're not familiar with the term insolvency, it's basically where a company or an individual can't actually pay its debts as and when they fall due. So an insolvency event for a company is usually something like administration or liquidation, and for an individual, it's the appointment of a bankruptcy trustee. So those are the kind of the key terms that we're talking about here. And when when a company or an individual becomes insolvent, the first thing that that insolvency practitioner is going to do is going to look at what are the debts, you know, who's owed money, and what are the assets available to actually pay those debts and pay out those creditors. And that is where having security over your goods or the proceeds of your goods is going to actually put you at the top of the queue for getting paid. So I've created a little bit of a list of things that you might want to do if your customer does enter into an insolvency event. So the first thing you need to do is prepare. So get your paperwork together, get your terms and conditions out. Ideally, they'd be signed by your customer acknowledging them. Get your verification statements ready to confirm your registration, and then contact the insolvency practitioner. Let them know that you've got a security interest. Give them the evidence of that security interest, and actually ask the insolvency practitioner for some information. So the sorts of things that you would be wanting to see is perhaps a copy of any inventory, so that you can see whether or not your goods are still perhaps on site. You might want to ask for a copy of a debtor's ledger to see whether or not perhaps your goods have been on-sold, and whether or not there's proceeds available for you to make a claim on under the PPSR, and really putting that insolvency practitioner on notice that you've got an interest and you're a secured creditor and you're expecting to get paid. The third thing that I recommend is trying to maximize your claim. So don't actually engage with insolvency practitioners on fishing expeditions. Their job is to basically look after the interests of all creditors. So if there is an opportunity to take an asset that hasn't been registered, a piece of personal property hasn't actually been registered, and use that to distribute amongst creditors for the benefit of all creditors, then they're going to do that. So take legal advice as early as possible, so that you're not actually inadvertently admitting something maybe that you shouldn't to the insolvency practitioner. They're going to be on the lookout for unfair preference claims, and sometimes I see clients come to me a bit too late and they've already sort of admitted certain things. So seek advice early is probably the final tip for that. So the idea being that once your customer goes into liquidation, or if it's an individual, if they're insolvent, you're wanting to recover your stock or the proceeds, or actually negotiating a settlement with the insolvency practitioner. Having that registration in place is actually putting you in a position of strength for any registration that you might have, even if it's argued by the liquidator. The fact that you've got that registration is going to really assist you.
All right, thanks for that, Nat. I think just in the interest of time, we have basically come to the end of our allotted time. We've had some really great questions that have come through, and we, as Natalie touched on, we will get to those in time. We'll actually respond to you directly on those. All of the webinar slides will be available on our website shortly after this webinar, so you can always access the additional slides and information that we didn't get to. But certainly, as I said, certainly if you've got any questions, feel free to contact myself or Natalie directly in the future. No doubt we'll run another webinar in the not too distant future, Natalie. Yes, thank you for coming on and presenting such detailed information on the PPSR.
No problem. I hope that that's been helpful for people, and yeah, please feel free to reach out if you've got any questions at all.
Fantastic. Thanks so much for your time, everyone, and thanks again, Natalie, for coming.
Bye.